Michael Procopio, take the stage. It's yours for the next 10 minutes, and you can dive in whenever you're ready. It's great to see you here today, and thank you for your support of OpportunityZones.com and OZ Pitch Day. Really appreciate it.
Awesome. Thanks for having me. Hello, everybody. Let me just share the screen, make sure I get this right. Okay, perfect. So great to be on. Thanks for having me. As you said, my name is Mike Procopio. I'm with the Procopio companies. We're a vertically integrated multifamily developer based in Boston. We've got projects up and down the Eastern Seaboard. Founded in 1950. We've been doing this for 75 years. A fairly good-sized team in place here that executes between 50 and 60 people on the investment side. And we're here today to talk about a project that we've got going, almost fully capitalized in Greater Boston. Great OZ deal. We've worked on it for a number of years. It was actually one of the first pieces of land that we tied up under the OZ program, and we're in the ground in construction, and we've got a small slug of equity remaining. So I'll walk through some of this, and hopefully you all find it interesting. So a little bit of background on the team. Like I said, 75 years in business. I've got some of the leadership teams shown on here. 20 plus national awards. We've got 12 to 13 active projects at a time across our geography. Typical project for us is anywhere from 65 units to 500 units. And kind of our capital sources range across that spectrum from syndicated deals, our own balance sheet, and then we have some fairly deep relationships with family offices, mid-market family offices. We've executed a lot in the OZ space with them. And then also some fairly programmatic institutional relationships with Carlyle and some other larger non-OZ players. But in this case, this is a family office and syndicated deal that we're going to present. Some of the recent investments, just to kind of talk track record, a lot of full cycle deals, a lot of stuff executed in the OZ space. Obviously, none of those are full cycle yet. We haven't reached that point in the program. We have executed some pre-TCO exits into the OZ space. Those have been very good as well. But as you can see from these, a lot of awards, a lot of larger scale projects. We do everything from garden style stuff. We've got waterfront stuff. We do urban infill, high rise stuff. So kind of a wide swath of market space that we're in, typically in the market rate, non-affordable Class A luxury space. Again, some more. This is all just kind of recent stuff over the past couple of years. Again, project budgets kind of ranging from 30 million to 200 million. Across the board. So this is the project we're talking about today. This is called Clio. This is at 57 Main Street in Marlborough. Marlborough, we'll talk a little bit about. It's a suburban Boston commuter town. Really great location. Top 5 submarket for sure in the Boston region. Boston performs really well for multifamily. It's very radically undersupplied. So the stuff absorbs really quickly. There's a ton of demand here, driven from the meds and eds. And the life science explosion that's happened in Boston. So this is about 135,000 square foot project. 90K of that's net rentable. A lot of amenities. This is a typical, for those of you not from the Boston area, this is a typical Boston project. They're a little bit smaller than some other markets because we don't have the land. These are urban infill deals, and they're very heavily amenitized, typically in a podium configuration. So this is a 4/1 podium, so 4 levels of wood framing over a steel and concrete podium with 92 units and a structured parking deck as well. So Marlborough, you can see on the pin here, Marlborough is right basically in the middle between Boston and Worcester. Those are the 2 biggest cities in New England. This is about a 6.5 million population metropolitan area in eastern Massachusetts, southern New Hampshire, northern Rhode Island. There's 2 main belts that run around the city of Boston. There's the Route 95, I-95, and then there's I-495. This is situated out on I-495. These are major commuting belts, but they're also major kind of industrial business bands. This is where all the workforce is scattered outside of Boston proper. They cluster up along Route 128 and Route 95, and then 495 where this project is located. 2019, Marlborough was named a top 10 Boston suburb, ranks in the top 17% of best small U.S. cities, and it's right between these 2 metros. You can kind of get a feel for the downtown. This is suburban kind of commuter living, but this project in particular in this location is somewhat dense for being in a suburban location. Submarket performs really, really well. We can get into some of this as well, but you can see there 6 out of 57 submarkets, 16% year over year rolling change versus the market. And again, the occupancy rate over 97%. These are really radically undersupplied markets. I included some comp set materials as well. We'd be happy to share the underwriting model, but just to support kind of the rents that we're showing. We're showing a mid-2s or mid-$3 square foot on average rent across the unit types. And that's very much in line with what else is in the market. Marlborough is a very mature market. It's an institutional market. There's been institutional stuff built, exited, full cycle deals. There's no issues there. It's a very well-known submarket for the Boston region. So in terms of in this particular investment, what's driving the thesis here? Really, there's kind of five big things. So really strong demographics and workforce drivers. Average household income over 130 grand within 5 miles. 7 million square feet of corporate stabilized business use, basically within 10 miles of the site. Almost 500,000 jobs within a 15-mile radius. This includes headquarters for some of these companies, major campus locations for Boston Scientific, Raytheon, Synovian, Oracle, GE, Toshiba, TJX, which owns the Marshalls brand and the Home Goods brand. So really, really, really good location from a suburban workforce and demographic perspective. These are affluent Metro West suburbs of Boston. Really, really good accessibility. You're right on Route 20, 5 minutes to 495, 10 minutes to the Mass Pike, I-90, 290, and Route 9. This is, if you know Eastern Massachusetts, this is how you get around. So really, really, I don't think there's probably not better located sites in terms of driving. This is kind of a commuter's dream site, especially with the workforce that's kind of scattered out in those submarkets. Really strong submarket fundamentals. The previous slide showed slightly different numbers. It was a slide from last year. We don't have an updated one, but this is this year 12.3% year over year rent growth, 97.7% occupancy rate as of Q2 of this year. And the blended occupancy rate over the past 5 years is 96.4%. So again, it speaks to a really undersupplied market. These projects typically this project involved litigation to get it done and still took 4 years to entitle. So there's really just a very slow drip getting this stuff out and into the market and available for people. And then obviously it's in a QOZ, so we're structuring it as an opportunity zone deal. And then finally, it's significantly de-risked. It's a very late stage deal. This is nearly fully capitalized. The construction loan is closed. The equity raise is almost done. There's only 500,000 left on this allocation, so we're really kind of cleaning this up at this stage. So it's significantly de-risked in terms of kind of where we're at in terms of deal milestones, but also in terms of the actual physical construction. We're out of the dirt. We're into early foundations. For those of you familiar with construction, you know that's where a lot of the troubles are and a lot of the contingency risk is, and we're through that point already. So in terms of current status of where it is, construction loan is closed. That's a SOFR 290 local bank deal, great local lender, stepping down to SOFR 235. It's forward swapped to hedge it, and there's plenty of term on that 5+2 extensions. It's a $17.5 million equity raise in total. 17 of that has been closed. There's $500,000 allocation remaining for anybody that's interested in that. The construction contract is executed. It's a guaranteed max price, and the project's basically 95% bought out, well below the budget. So really all good news on that stuff, and you can kind of see the milestones there. Construction projected to be completed April of 26, and then stabilized, around the end of 26 into Q4. I'm not going to go through, just for the sake of time, I'm not going to go through all this stuff. I included this if anybody wants the deck. But at the end of the day, this yields an LP IRR of 16%. It's a 3.3 equity multiple. This is a 6 yield on cost, which for many markets in the country is very tight. That is not tight in Boston. That is where the market is. The stuff is still exiting at mid-4 caps. A couple of years ago, stuff was exiting at low 3 caps. So there's still kind of 100, 120 basis points of spread there. and really kind of fits neatly in this market here. So um, that's really my pitch. If folks are interested, we're within the time bubble here. I don't know that I got you back on time, Jimmy, but I certainly stayed within my 10, which is pretty rare for me. So if folks are interested, happy to share the deck, happy to share the full underwriting model. I've got no problem sharing that stuff with folks that want it. Dig into the assumptions. I wasn't going to have time to go through all of them here. Happy to answer questions, however folks want to do that.
No, that's
Thanks.
great. Thank you, Mike. Yeah, we're getting back on time, but I want to give you the full 10-minute allotment that you're due. So we'll get to our next presenter in a few minutes here. We're doing good. We did have a couple questions here. John asks, any dividend recap planned? And if so, when?
So the short answer is yes. I'd have to pull up the model. So typically what we do is like a year after stabilization. This deal may be slightly different because we forward swap the loan to hedge that, so we wouldn't want to pay swap breakage. So there would be a little bit of an interesting analysis to do there. But yes, I can pull the model and get that number. Yes, there is, and it yields. I believe it yields something like a $6 million cash out, and it's likely in year 3 if I had to answer that off the top of my head.
Good. We did get 3 people just chiming in the chat here in the last few seconds. Chad and R Moore and Richard all saying, "Hey, I'm interested. Send me the deck." So you've got a few interested people in the chat already here. Question for you on cap rates. You mentioned cap rates very briefly there toward the end. How do you anticipate cap rates may change over time going forward? We have interest rates coming
Yep.
down, obviously, and I'm not too familiar with the market in the greater Boston area, but what are things
Yeah,
looking
so
like there?
Boston's really tight cap rates. So it historically has been. So I can just for context, we sold a whole bunch of deals in 21 and 22. Those all traded very low threes, 3.2, 3.4, 3.3, 3.5, that kind of space for this product, including an OZ deal that was a pre-TCO exit. Then it was not leased up. It was 0% leased, and it traded a 3.4 cap. So that's kind of the baseline. Now you come to today, and kind of people expected it to run, and people were talking about 5.5 and 6. That never materialized. The trades that are still occurring today are all sub 5. The institutional stuff is between 4.5 and 4.7. And I think the expectation is that will drift back down a little bit. I think low mid 4s is where Boston kind of settles out. It's just an incredibly tight market. It's incredibly undersupplied, and it's super high quality. All the institutions want to be here. So this is kind of the first market they pop back up in. And that's historically what we've seen kind of over decades, honestly, just the trend kind of repeating itself. So we haven't seen a crazy run. We don't think that's the case. Certainly long-term, our view is long-term cap rates are below a 5.
Good stuff. We had a
Stuff
couple
won't
more.
get done. Stuff won't get built otherwise here.
Right, yeah, no, that's understandable. We had a couple more people just chime in wanting to get the deck. If anybody wants to get the deck, should they email you or your team, or what's the best next step that they can take to request more information? And while you're pulling that up, quick question from Mitch. Mitch wants to know, will you be doing a cost segregation on this project?
Yes, 100% will be cost segging it. Yep, no problem with that. Here's what I'm going to do. I'm just gonna put my contact info here. If people want to screenshot it.
There we go. Mike
There we
at
go.
procopiocompanies.com. So please do email
Yep.
Mike. I'll post that email address in the chat in a moment here too.
That'd be great. And then I'm on LinkedIn. I'm pretty prolific on there. We share a lot of project info and updates and stuff like that. So people can always find me on there as well.
Perfect. I just posted a link to your email address in the chat. So if anybody just wants to click that and just send Mike a quick note that says, "Hey, saw you on OZ Pitch Day. Looks great. Send me the deck." I'm sure he'd appreciate that, and he can get back to you very shortly here. Mike, we're out of time. Thanks for your support. I really appreciate your support of OZ Pitch Day and OpportunityZones.com. I'll cut you loose there, and hopefully you'll have some investors be in touch with you shortly. All right.
Sounds good. Demote me.
Thank you, Mike.